Stopping inflation is job number one, Mr. President, as inflation remains top issue for voters in polls as Trump and Republicans are in a race against time. Hello, this is Robert Romano, Executive Director with Americans for Limited Government and Americans for Limited Government Foundation. Hit that subscribe button. Today, we're going to be kind of taking the temperature once again in this Fox News poll that was taken March 14 to March 17, which shows that once again, inflation and consumer prices remain the top issue of concern amongst voters. This was the case all throughout 2022, 2023, and 2024. It's one of the reasons why Republicans reclaimed a majority in the House of Representatives in 2022. And it certainly played a role as well in helping Republicans to reclaim both the White House and the Senate in 2024. President Donald Trump won re-election for his second term. And Republicans picked up a few seats in the Senate. And one of the biggest reasons for that, there were other issues in the election, obviously, illegal immigration. Joe Biden was very unpopular, but he went underwater largely in 2021 as a result of rising inflation. Certainly by August of 2021 and into September, as the botched withdrawal from Afghanistan occurred, Joe Biden was completely underwater, but inflation kept going up after that, and his job approval kept on sinking after that. And so inflation, it's a majority killer. Just ask Gerald Ford, Jimmy Carter, George Herbert Walker Bush, and now Joe Biden and Kamala Harris. All were one-term incumbents, basically, that lost because prices got out of control and the American people lost confidence in their government. And the same thing can happen to anyone who's in the White House and anyone who's in Congress. Nobody is impervious to this, and neither is Donald Trump. So we're going to look at my piece today. Inflation remains top issue for voters as Trump, Republicans, and race against time. Here we go. Inflation remains the top issue for voters as President Donald Trump enters his third month in office, according to the latest data in a Fox News poll showing 27% saying inflation and prices are definitely still the top issue, a consistent result that was also seen in the 2024 election. And here's the Fox poll. It shows Trump actually having the highest approval rating he's ever had for a Fox poll at 49%. But, there's still causes for concern. You want to pay attention to what's going on in public opinion polling. I think the polls were largely, especially about Joe Biden's approval rating, very accurate. They showed that Joe Biden had absolutely no chance of defeating Donald Trump early on. So Joe Biden jumped out of the race. And it showed that his approval rating was already underwater in 2021. So I think, and that was, you could say, oh, there's, kind of conservative polls or Republican leaning polls and Democrat leaning polls, but they all agreed that Joe Biden was in deep trouble and that inflation was the top issue again in 2022, 2023, 2024, and now once again in 2025. You can see here inflation, prices, cost of living is 27%. And that's basically the top issue amongst, I think, every single demographic here. College degree, no college degree, white college degree, white no degree, white men degree, white no degree, white degree women, white degree, no degree women, urban, suburban, rural white, suburban men, suburban women. Everyone agrees inflation's the top issue. And that's, that's what you kind of expect to happen here. Here it is, broken down, for men, 22%, women, 31%, white, 28%, black, 30%, Hispanic, 24%, non-white, 25%, white men, 23%, white women, 32%. And every age demographic too, underage, 45, 31%, above age 45, 24%, underage 30, 26%, underage 35, 30%, and then over 65, 16%. And then actually the economy and political division ranks slightly higher amongst that demographic. So nearly every single demographic, but certainly it's cutting across party lines as well. 32% of Republicans say inflation is the top issue. 21% of Democrats say it's the top issue. 27% of independents say it's the top issue. And I believe them because inflation really got out of control in 2021 and 2022, and the economy is still reeling from that. We could find ourselves in a recession. We could already be in a recession as a result of the inflation that we experienced during Joe Biden's tenure in office. It's just not going away as an issue. Now, if you look at what is job approval is, you can actually find that the issues this can come back and redound on President Donald Trump as well. The economy, do you approve or disapprove of the way Donald Trump is handling the economy? 56% disapprove, 43% approve. Inflation, do you approve or disapprove the way Donald Trump is handling inflation? 58% disapprove, 40% approve. And this cuts across all pretty much all demographics as well. The numbers aren't good. The 56 Trump won the gender gap, so he did really well with men. Kamala Harris didn't do as well with women as Trump was doing with men. But on inflation, 56% of men disapprove of Trump's handling on inflation. 60% of women disapprove of Trump's handling on inflation. And then if you look at the GOP number on this, 20% of Republicans disapprove of Trump's handling of inflation, 69% of independents disapprove, and only 6% of Democrats approve. So if you look at disapprove, 20% of Republicans disapprove versus 6% of Democrats approve. It kind of shows you that people are still upset about inflation. Trump's only been there for 2 months. How can he be blamed for inflation? Well, so far, his approval number is actually very good. 49%. Again, this is the highest it's ever been in a Fox News opinion poll. Do you approve? So he's doing, he's about 50-50 amongst men, 52-47 against amongst women. So that, he could be doing better amongst men, I think. I think he should be, winning the gender gap there just as he did in the 2024 election. So people want to see action on this inflation issue, I think. I think that's certainly what's going on here. All right, this cuts across party lines. We covered that. And then after inflation, the economy and jobs is the second most important issue at 16%. So James Carville in 1992, it's the economy, stupid. This is what we were saying the whole time Joe Biden was in office, 2022, 2023, 2024, that the economy inflation is a majority killer. The results come as President Donald Trump, although having his highest overall approval rating ever in the Fox poll at 49% on inflation, 56% disapprove of Trump, by far his and America's weakest issue, even as he inherited this mess from former President Joe Biden. That includes 20% disapproval amongst Republicans and 69% disapproval from independents. But Biden had problems when he was entering office, too, as the economy had just come out of the 2020 COVID economic lockdowns recession. He started with a positive approval rating as well, but he was underwater by August of 2021, prior to the botched military withdrawal from Afghanistan, thanks in large part to consumer inflation, which by that time had reached 5.3%. And we can actually look at some of those numbers here. This is where things were in August of 2021. I can zoom in a little bit. There we go. Consumer price index for all consumers. Consumer price index for all consumers was at 5.3% in the August of 2021. By December and January of 2022, it was at 7.5%. At this point, this is prior to Russia's invasion of Ukraine. But the Federal Reserve still is leaving interest rates at 0%, even as inflation was crossing a 7.5% threshold. But that didn't help. And here it was peaking in June of 2022 at 9.1%. And this is data from the Bureau of Labor Statistics. They gather this information every month, and the numbers are actually a lot better now. In the month of February, they dropped down below 3%. So I think that the inflation is definitely cooling down right now. Now, consumer inflation, again, across 7.5% by January 22, 9.1% in June of 22. And Biden never recovered. It was a majority killer. He lost the House of Representatives in 22 and it proved fatal in his own reelection bid as he left the race with former Vice President Kamala Harris running in his stead, but to no avail as Trump was able to ride the dissatisfaction with Democrats to victory in November of 2024. The lesson is that every election is always a referendum of the incumbents. Whatever took down Biden could take down Trump and his party too. Just ask Gerald Ford, Jimmy Carter, and George Herbert Walker Bush, whose party suffered all similar fates. Now, one difference is that in his second term, Trump cannot run for office again, but the impacts politically of the economy will almost certainly be felt by congressional Republicans in the 2026 midterms, and then again when Republicans name a successor to Trump in 2028 for president. The good news for Trump and Republicans is that while during Biden's term, inflation was already outpacing incomes, inflation was already outpacing average weekly earnings by April of 2021, according to Bureau of Labor Statistics data. And that persisted all the way until June of 2023. 2 years is an eternity in politics, and by then, Joe Biden's fate as a one-term president had likely already been sealed. So far, during the first 2 months of Trump's second term, earnings are still outpacing inflation, with consumer prices appearing to continue cooling. So we want to look at this chart. This shows you what took out Joe Biden. Here's, and that's the red line, and it gets up to 9.1% in June. And then there's the blue line, which is earnings. So whenever inflation outpaces earnings or incomes, you can see this with Jimmy Carter, Gerald Ford. You can see this with George Herbert Walker Bush. Those were all one-term presidents. And so too was Joe Biden when this happened on his watch. And you go all the way until June of 2023, where finally earnings start going faster, growing faster than prices. But by then, Joe Biden was deeply underwater. His approval rating was in the toilet. And now this is persisting. So now you get to the end of 2024. Prices are still cooling. But again, it wasn't enough to save Joe Biden. But heading into 2025, prices are still cooling and earnings are keeping ahead of that. So if that persists, just like it did during the first Trump term, your purchasing power is going to go up. So this is the, kind of the sweet spot you want to see. You see it in the Obama years as well, earnings outpacing inflation. And that's just what you want to see. If that's happening, then the American people are getting richer, they're getting ahead. And I'd say this chart is the most important chart of any chart, the bar none. This is it's like 4 for 4 of showing that when you have a persistent inflation problem, as Joe Biden did, your party is going to be a one-term incumbent party. You're not going to get reelected after that. And Democrats had just come into office in 2020. So recessions aren't great either. Donald Trump had a recession in 2020, and he ended up not getting reelected. So the economy is definitely a fateful issue to definitely pay attention to. Over time, therefore, as purchasing power continues to increase, public attitudes should continue to improve during the second Trump term here. Given enough time, it is possible Biden and Democrats could have pulled out of their tailspin too, but we'll never know the counterfactual. For now, Trump is more or less even in approval, but that won't last forever. He is burning through a lot of political capital right now and taking a beating not just in the press, but also on social media. Voters are holding strong on key Trump issues like the border and immigration, but this political phalanx is not impervious. Any disapproval on the broader economy will be determinative, and the actual numbers will matter a lot. Now, let's look at Joe Biden's approval rating, and you'll get a sense of what I'm talking about here. Let's see, maybe later. Okay, here we go. Here was Joe Biden. And here he is, and you see him starting off at about 55% of job approval in 2021. And as inflation increased by June, it was already up to, we're getting up to 5% here. In April is when it crosses the threshold. April is when the inflation starts moving faster than incomes and earnings. That's right there, right there. April 2021. So as the red line goes up, what happens to Joe Biden's job approval? It goes down, and his disapproval goes up. So by mid-August, Joe Biden is about to go underwater because you have a big inflation problem, and it just gets worse and 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 worse. And look at this. In June of 2022, he peaks at job disapproval of about 57%. Why? That's when inflation peaked, June of 2022. So inflation, it's a majority killer. It makes presidents only serve one terms when it happens to them. Right now, Donald Trump doesn't have that problem. So the numbers are actually pretty good. If inflation is the problem, inflation has been cooling for the past 2 years now. It just didn't cool quick enough for Joe Biden to get reelected or for Kamala Harris to benefit from that. It was by the way, for the entire 4 years, inflation grew faster than earnings. That's never happened. Not even Jimmy Carter had that happen to him. Not even Gerald Ford had that happen to them. Eventually, earnings outpaced, or incomes eventually outpaced the growth of inflation. But Joe Biden, you were definitely not better off than you were 4 years ago. So again, this chart I think is the most important chart. And we've got some other numbers to look through here. Another plus side to all of this is, although it might appear counterintuitive, President Donald Trump's reciprocal tariffs will go into effect on April 2nd. Americans for Limited Government strongly supports the Trump trade policy. We have since he started running for office in 2015, and that was 10 years ago. The announcements of which have led, though, to shaky equities markets in the near term. Like right now, Donald Trump saying we're going to do tariffs, and globalist investors are like, "Oh no, there's going to be tariffs. I don't know what that means." And so then you see kind of sell-offs, what I would call buying opportunities in equities markets, but also in other commodities and also things like crypto. You see kind of price corrections that are ongoing, but this might have happened anyways. With coming off of peak inflation, you might expect an economic slowdown eventually. Certainly the 10-year, 2-year inverted. That's the spread between 10-year treasuries and 2-year treasuries, inverted in 2022 and uninverted most recently. And as it uninverts, unemployment's been rising. It's up by 1.3 million since January of 2023. And none of that helped Joe Biden. The economy was slowing down. Like I said, we could already be in a recession. We might find out later if and when the recession actually strikes. I think I'll be right about this. But in any event, the reciprocal tariffs will go into effect on April 2nd. And that can lead to shaky equities and put those markets, stock markets, and other indices into correction as the U.S. dollar has strengthened. But so too are commodities markets and prices, which feed into the producer and ultimately consumer prices, also cooling. So it's kind of curious. It's like, oh wait, Democrats said that the inflation was going to, or that the tariffs are going to cause inflation. But the evidence seems to show that as Trump has put these tariffs into effect, and as they're coming into effect, prices are actually cooling right now. So it's a little bit, although it's not very mysterious when you look at here's producer prices by commodity. And here's, let's look at the nominal dollar index. Here we go, dollar index. So you can see an inverse relationship here between the strength of the dollar, which is the blue line. When the dollar is strong, equities go down. When the dollar is weak, equities go up. happen, pretty much like clockwork. Here's the equities slowing down and the dollar is getting stronger. And so you can see also an inverse relationship between investment into stock markets versus, say, the bond market. If the people are pouring into stock markets, they're probably selling bonds to create cash to buy into stocks. And then when they're selling stocks, they're probably buying bonds, especially institutional investors, like your JP Morgans, et cetera. And so they kind of work against one another. So the stronger the dollar, the probably, the lower interest rates are going to go. So if you want to lower interest rates, you want a strong dollar. You want to lower inflation. Now let's look at the dollar versus commodities. Here's the dollar versus commodities. Same exact inverse relationship. When you have a weak dollar, you have strong commodities. So the red line is the producer price index by commodity, all commodities. And you can see that when you have a weak dollar, you have the high commodities prices. When you have a strong dollar, commodities prices go down. And again, it's like clockwork. And what I'm noting is that as the producer commodity, as you see a kind of correction in stock markets, they seem to, or you see a pop in stock markets seems to precede jumps in commodity prices. And then you see weakness in stock markets. When the stock market starts to correct, the commodities prices start correcting shortly thereafter. And both of these behave off of the dollar. So it could be that the equities are actually a leading indicator, and that the commodities can follow suit. So if you want to kill inflation, well, maybe commodities prices should come down. Food, energy. That's the thing that's going to actually help bring down inflation, is if the producer price index by commodity, all commodities, is going down. So I see the dollar is in a strengthening period here. We're in a little bit of a strengthening at the end of 2024 into 2025. Well, that can bring down equities. And we are seeing equities go down. Look at that. Boom. And so every time equities goes down, I'm arguing that the commodities prices are going to go down too. So it's again, it's a little counterintuitive. I thought the tariffs were supposed to increase prices, but you can see some other effects. Although prices are marked differently on stock markets as a function of market caps, whereas commodities are more so driven by supply and demand, I still think there's a liquidity function there. If you print trillions and trillions of dollars, commodities prices are going to go up. Surely they did in 2021 and 2022. Supply and demand being what it was, production had slowed down, certainly, but we had printed a lot of money. So you can jam a lot of liquidity into markets, and it's going to drive up prices, whether it's for commodities or for, equities. I think they behave similarly. So again, the pricing of commodities is different. It's supposed to be supply and demand, but I bet you that, when you see money getting sucked out of the stock markets, you're eventually going to see money sucked out of the commodities markets as well. So you can drive down inflation just by spooking investors. Does that sound right? Yeah, I think that might actually be correct. President Donald Trump is coming in with his tariff policies. We strongly support those policies, and they might actually be driving down prices and solving the inflation problem. As counterintuitive as that sounds, I know it's like, what the heck is Robert talking about? It showed you the charts. You can see, and let's look at this one. This one shows you the producer prices for all commodities, and it shows you the NASDAQ composite index. And it shows you that when the NASDAQ is going up and it's going to the moon, well, shortly thereafter, commodities are going up. Could be some profit taking, and then they say, "Oh, let's go buy commodities," or something like that. In any event, there's a lot when you have a lot of money flowing into capital markets, you can see booms in equities and booms in commodities. And then when you see busts in equities, you can be followed by busts in commodities. And then you could see a slowdown, you could see a recession, and then prices go down. What a coincidence. You have a recession. Here's 2000. You have this gray line here. These gray lines every time, and it affects equities and commodities. So I think that, yeah, they're very much related, and they might have different pricing mechanisms, but they're still going to behave very similarly. But the timing could be different. It could be that equities take a hit first, and then commodities. But so they're both sensitive to overall economic conditions and any cooling in overall capital markets. In recent years, sometimes run-ups in commodities prices were preceded by big stock market booms, and drops in commodities prices were preceded by big market sell-offs. And there's that chart again. In short, for a variety of reasons, I look at trade partners tend to weaken their currencies as a competitive devaluation to boost exports. This has happened a lot. They call it currency manipulation. So if you're an exporter to the United States, what do? You weaken your currency, you cause inflation domestically. And what does that do? It makes your exports to the United States cheaper than the goods that we produce. And you can garner trade advantage that way. Well, so if we put higher tariffs on, countries will respond by weakening their currencies so that the prices of their goods remain somewhat low in the United States. What happens when all of our trade partners are weakening their currencies? The dollar is going to strengthen. When the dollar strengthens, prices go down, commodities go down, equities go down, inflation goes down. If you have persistent strong dollar, you could get a recession. And that's just kind of the way it works. So sorry, Chuck Schumer. Sorry, Hakeem Jeffries. I know you were really invested in the idea that tariffs would cause higher prices. But it could be that because trade partners respond with competitive devaluations, you're going to see lower prices. And Trump's going to probably look like a genius when this is all over. So it leads to a relatively stronger dollar, which usually results in capital shifting from stocks to bonds. When you see money flowing into bonds, interest rates are going to go down too. This is all the things Trump wants to happen. President Trump's tariff policies appear to be bringing prices down, not up. And so the inverse with the relationship with the dollar holds up with commodities too, with a strong dollar correlating with lower commodities prices and a weak dollar correlating with higher commodities prices. So we can see here. Here you can see the strong dollar and the NASDAQ going down. And then you see a weak dollar and the NASDAQ goes up. Works here too. So that's in 2008, 2009. It works again in let's see, the 2010s. You see kind of a slowdown of the dollar. We see a boom in equities. You see you see a strengthening of the dollar. You see a slowdown in equities. And the same thing happens with commodities. And the commodities, food, energy, oil, gold, bunch of metals, pretty much things that are traded on commodities exchanges. So again, weak dollar, high commodities, strong dollar, low commodities. So want to stop inflation, Mr. President? Seems like a strong dollar is the ticket. And the timing could be impeccable for his tariffs, insofar as a recession might have been on the way ever since peak inflation in 2022, which also would bring prices down. Democrats' assumption that tariffs make prices go up. I mean, certainly sales taxes are included in the consumer price index. But if that's the only thing you think is going on, if you think the whole world revolves around tariffs, nuh-uh. They look at the value of currencies, particularly look at the US dollar, the world's reserve currency. Again, I just showed you these charts where the dollar is the most important mover and shaker when it comes to commodities markets and when it comes to capital equity markets. That's just the way it is. It's been true for decades and decades, certainly in the post-war era. Certainly, it was true even in the pre-World War II era, when the dollar was getting really, really strong in the 1930s, because Great Britain was coming off the gold standard, and all these countries in Europe were coming off the gold standard. You know what happened? The dollar got really, really strong, and unemployment went to the moon. It wasn't until FDR came in and they actually said, they're doing a competitive devaluation. We need to weaken the dollar, that unemployment started coming down. We had deflation. The dollar was so strong in the 1930s, we had deflation. So you don't want to see really high inflation. You don't want to see really high deflation either. You don't want prices just dropping, because then people, what they tend to do is hold on to money. It's like, oh, prices will go down again tomorrow. You just want a kind of nice, maybe 1% inflation, 2% inflation, and that's usually conducive to economic growth. So in any event, the tariffs are very well timed, in my opinion. That the assumption that tariffs will make prices go up seems to have a fundamental flaw in that core prices are still being set on publicly traded exchanges. So again, look at these commodity prices. They're being set on publicly traded commodities exchanges. So if money's flowing out of capital markets, eventually it's going to flow out of the commodities markets too. That's my argument. And so if tariffs have a near-term spooking effect on investors, that will feed back ultimately into commodities prices that set producer and consumer prices. Now, an overall economic slowdown or recession obviously carries its own set of issues, including rising unemployment. So you see, inflation cooling down, you're going to see unemployment start to go up. Happens every time. It's like clockwork. But these storms have been weathered by White House incumbents before. Richard Nixon, Ronald Reagan, George W. Bush, and Barack Obama all had recessions either start or that were ongoing in their first terms, and all four went on to get reelected relatively easy. So the thing that's bad for White House incumbents, inflation. Recessions, you can weather them, but it's probably better to get them over with as quickly as possible. So the lesson there could be to just rip off the Band-Aid. Killing inflation is job number one, Mr. President. This is Robert Romano, Executive Director of Americans for Limited Government and Americans for Limited Government Foundation. Hit that subscribe button, ring the bell for notifications, and have a good day. But first, we're going to look at your chats. Thank you for joining us today. Let's come over here. All right, with just a few chats. Let's see. Ken Badard, a.k.a. Matt Finkerton, says, drones are my top issue. Okay. S.A. Meyer, sorry, Rasmussen is the only polls I believe are accurate. Yeah, but every single poll showed that Joe Biden was underwater in 2021. In 2021, they weren't trying to help Joe Biden by saying that he was very unpopular and that everyone disapproved of him, and that inflation was the top issue in 21, 22, 23, 24. Think about it. The numbers were awful for Joe Biden. And do I have to go share my screen again? Let's go share the screen again. That's fine. We'll do the screen one more time here. We'll leave your chat up. Thank you, S.A. Meyer. Let's go back to his job approval. Here's Joe Biden's job approval. This was the average of all polls. It showed that not just Rasmussen, every poll had Joe Biden underwater. Look at this red. Look at this sea of red. Nobody thought Joe Biden was a popular president. Nobody. The polls were accurate. Joe Biden was unelectable. He could not get elected dog catcher in 2024. Look at how far back these numbers go. Every single poll, every 100% of the polls, all throughout 2024 showed that Joe Biden had a negative job approval rating. Why? Because inflation was a huge problem. Look at the inflation when Joe Biden's president. Look what happened. Look at how that's a majority killer. It can happen to Joe Biden. It happened to Gerald Ford. He was a Republican. It happened to Jimmy Carter. He was a Democrat. Happened to George Herbert Walker Bush. He was a Republican. Happened to Joe Biden, Democrat. What does that mean? That when you get to independent voters, people who are swing voters, the people who put Donald Trump into the White House, not once, but twice, in Pennsylvania, Michigan, Wisconsin, Nevada this time, Georgia, Arizona in 16, and again in 2024. People pay attention to their pocketbooks. Now, a lot of people will vote ideology. They'll vote for their party. That's fine. But the people in the middle, they're going to vote on their pocketbooks. And they get upset. Right now, they're a little upset. Do you approve of the job that President Trump is doing? Yeah, about 49% say they do. But when you get onto inflation, do they approve? They approve. By the way, they approve of the way he's doing the border and immigration. Let's pull that one up. There's inflation. There's border security. So the Fox poll shows that Trump is an extraordinarily popular president on the issue of border security and immigration. He's doing great. He's declared a national emergency. He sends the military to the border. He says, we're not messing around. We're going to destroy the drug cartels. People want to get tough on illegal immigration. If there are millions of people just Joe Biden just let them come across the border. Very, very popular president, Donald Trump is on the issue of illegal immigration. Majorities agree with him on in almost every single demographic. I think this poll is accurate, but it also shows that on inflation, Donald Trump could lose support. He is not immune to this. He is not impervious to this. He too could become an unpopular incumbent. And inflation is it has a 100% batting, 1,000 per. What is it? What are you batting 300 in baseball? So you're batting 1,000%. It took out Gerald Ford, Jimmy Carter, George Herbert Walker Bush, and Joe Biden. It can take out Republicans. Donald Trump doesn't have to run for re-election again, but Republicans have to stand for re-election in 2022. I'm sorry, 2026, and they're going to have to sit, and whoever's going to replace Donald Trump could be J.D. Vance. J.D. Vance could suffer if inflation doesn't get under control. Now, I'm arguing that inflation is relatively under control right now in terms of earnings outpacing the rate of inflation. Right now, earnings are increasing faster than inflation right now. And that's what you want to see when you have a healthy economy and the American people are increasing their purchasing power. Again, I think this is the most important chart. If that blue line stays above the red line, I think that President Trump's numbers on inflation are going to go up. They have nowhere to go but up as long as inflation is cooling and the earnings are increasing. And so there we go. It's like, oh no, I don't trust the polls. Only Rasmussen's correct. That's not true. Every poll that said Joe Biden was underwater was correct. Every one of them. Look at this. It just goes on and on. Sea of red. I don't even know what year we're in here. But pretty much, where's Joe Biden ever above water? Oh, there's one. Let's see. But mostly red. Mostly red. There we go. I guess we're getting back closer to 2022, 2021 here. We're still in the red, though. Look at all this red. Okay, there you go. This was 2021. And as soon you start going negative, and Trafalgar had him going underwater on August 8th to August 11th of 2021. By then, inflation was already north of 5%. And then you have the Afghanistan withdrawal, and he goes into the red. But then inflation keeps getting worse, and it just gets worse and worse and worse until you can't find a poll where Joe Biden is above water. So no, I think the polls, they pretty much knew that Joe Biden was in trouble. Certainly, Donald Trump noticed that Joe Biden and the U.S. economy were in trouble, and he, dissatisfaction with the incumbent. Every single election is a referendum on the incumbents. Never forget that. Republicans are not immune to inflation. They are not immune to a bad economy. It's just the way it works. Voters in the middle, swing voters, they are the kingmakers. You have to pay attention to them. If they're telling you, if 69% in the Fox poll of independents are telling you that they disapprove of inflation, Republicans had better be paying attention to this. That's a catastrophic number. Trump is fortunately doing well on border security, and so he's still popular on some issues. But inflation, the economy, that can take out any incumbent. Nobody's immune to it. Herbert Hoover won in a landslide, and the economy went to hell. The stock market crashed, and then Republicans were wiped out almost to the point of extinction in the 1930s because the economy was awful. You had deflation, you had 25% unemployment, and they got annihilated. They were like dinosaurs. They were walking around on the edge of extinction all throughout the 1930s because the economy was terrible. In 2008, the economy was terrible as the mortgage crisis went on and on and on and on. The markets were crashing, unemployment was skyrocketing, and Republicans were annihilated in 2008 because of the economy. So do not underestimate it. Now, in 2020, the economy was locked down and we had a recession. And, and not so coincidentally, Donald Trump narrowly lost the election. There's issues with the mail-in ballots, and we've talked about that before. But the economy was really telling. But Donald Trump was running really, really strong that year. He nearly came back and had a come-from-behind victory there. But he was getting killed in the polls all year long. But he waged a comeback as the economy reopened, confidence started being restored in the American economy. And Donald Trump, what did he lose by? Like 43,000 votes, 23,000 in Wisconsin, 10,000 in Georgia, 10,000 in Arizona in 2020. He nearly came back and won that just by reopening the economy. As the economy improved and in 2020, then so did Donald Trump's fortunes in 2020. And he didn't take he didn't say just leave everything locked down. He didn't want to, Republicans would have been annihilated if the economy hadn't started reopening in 2020. But Trump came from behind and he ran really strong. So, and I noted that Ronald Reagan had a recession early in his term. You also had, so did Richard Nixon. So did George W. Bush. So did Barack Obama. They all got reelected pretty easily. As the economy improved, so too did their approval ratings, and then they were all easily reelected. So there you go. Just pay attention to the economy and pay attention to inflation. I think the numbers look okay on inflation right now. I think it's definitely improving, and it's gonna get better and better. But people need to be patient with that. But the messaging could be better. I think the White House needs to pay attention to that. That is all. All right, let's see here. Betsy Burns says tariffs are not hurting America. President Trump knows what he's doing. I agree with you, Betsy. Leaders that he used him gave him what he wanted. They are already working. And then Esther Rotella says, great job, President Trump, USA, USA, USA. Yeah. No, I think things are going to definitely improve. We're definitely going to, in terms of the economy and in terms of inflation. Before that happens, though, you might see unemployment go up. I don't know how much it's going to go up. In Japan, as you see the aging workforce, you see that when they have a recession in some place like Japan, the unemployment rate doesn't get very high, 3%, maybe 4%. So right now we're at like 4% unemployment or 4.1% or whatever the number is. It's relatively low unemployment. And so if we do get a recession right now, maybe you don't see it get above 5% or 6%. Now those numbers would be very, very bad. Republicans would probably not do too well in the midterm elections as a result of a recession. But they definitely won't do well in 2028. And 90% you're going to lose seats in the House in a midterm election, going back a century. And that's just the statistics on that. White House incumbent parties, they don't do well in midterm elections. And 9 times out of 10, you're going to lose seats in the House. About 2 times out of 3, you're going to lose it in the Senate. So Republicans, they want to defend their majorities in the House and the Senate. Well, you want to see a really good economy. But even when you see a really good economy, the White House incumbent parties still tend to lose seats. In fact, George W. Bush there's exceptions. So in 1998, Bill Clinton actually picked up seats in the House. And he had a really strong economy. But in 2002, we had a recession. And George W. Bush, he picked up seats too in the midterms. It was because of 9/11. So sometimes there's an intervening issue. Now, you could argue 1998 had less to do with the economy and more to do with the Monica Lewinsky affair. That the American people were actually supporting Bill Clinton because they thought that the impeachment of Bill Clinton was a big waste of time. You could make that argument. The other exception to the midterm jinx was 1934, FDR. He got elected in a landslide, and then again he picked up seats in the House in 1934 because people still blamed the Republicans for the Depression. So it's like, okay, so the economy clearly can be an intervening factor. It could be that come 2026, that whatever weakness in the economy is, Republicans have successfully shifted the blame to where it belongs, which is to say that we had bad inflation in 2021 and 2022, and eventually it was going to take the economy with it. So any recession that's caused, people might blame Joe Biden for that. It's totally possible. But they might blame Republicans. And so Republicans should be prepared for that. And so you should be prepared to talk about inflation. I think it's a very, very important issue. It's job number one, Mr. President. You need to probably have a stronger dollar. That'll take down commodities prices and the producer index, which will bring down consumer prices. Stock market might not do great during that time. You could see a slowdown, you could see a recession, but it's probably worth it in the long run if the goal, job number one, is killing inflation. So that's the live stream. Hit that subscribe button, ring the bell for notifications, and have a good evening. Have a good weekend too.